Okay team, Apex Trades here. The markets have just opened up and let's see what fire we have got today. So the markets are super bearish at the moment. There seems to be a feeling of, that the price is going to start to drop down, and that's, we'd definitely be forgiven for thinking that. Just thinking about my current setup and what I've got planned in terms of trading. But if you look, you see we've broken quite a significant channel in terms of the parallel channel that we've been trading within for quite some time. Actually, you can see we broke down here. For some time we were acting as nice support region, and we broke down beyond that. Now, right now, it doesn't even look like it's got the legs to come back up. The problem is, it's very easy to get fearful right now and expect the price to just continue and to drop down, but it doesn't always work like that. And so a sensible trade is what we're trying to identify is where's the liquidity. And obviously what you tend to find with these things is the liquidity is really where the markets will go. So if we were to have a huge drop down, let's say today, it wouldn't just happen now, because remember, whenever markets need to move, if there's a lot of liquidity, then price tends to move slowly. When there's little liquidity, price moves fast. And the way to get out of that liquidity, the reason that we can drop liquidity is if we have a big move to the upside, we clear a lot of the liquidity that's around here, and then we can really push back down again. So, markets have just opened, it's a few minutes in. I've mapped out the liquidity zones. I'm just going to go to the 1 hour. I think you can see this a little bit better. Now, where I'd be interested in a move to the downside is somewhere around here. Okay, break this structure a little bit, come up, claim some liquidity. I don't even think I need to see a retest of this. I'm just seeing specifically where liquidity is going to be, and even now we're seeing a price move to the upside. Whenever we get this kind of bearish sentiment and everyone starts to feel like, oh no, I'm going to miss out on a move, well then that's exactly how markets like to manipulate. They oftentimes go against the idea. They get everyone trapped first, which is sensible from a market maker's perspective, and then they push price to the downside. So right now I've got a limit order somewhere around here. I think it's 22. In fact, let me just double check what my current limit order is. By the way, guys, can you let me know if the signal's okay, if sound's okay, if I'm choppy, if I'm coming in and out, all of that kind of stuff, if you don't mind. I'd appreciate it. Maybe just lower that down a touch. Feels like a little bit loud. Right, my current orders are, let's see, I have a short position at 22,400, so let's just mark that about that as in a chart and what the rationale is. We're just here. This is where I've got a short order, because I think, like I say, right now we are making lower highs and lower lows, but again, for us to get a big push down, I think it's going to want to claim the liquidity first, and then we see a push down. Now I like to trade with liquidity. I like to know that, where the big areas on the chart where we're going to come up and soak that up, simply because that's where you get momentum. Momentum has to take liquidity first, clear out the liquidity so that it becomes low liquidity, and then price can really start to move. So again, I'm going to be targeting these areas. You can see as well, if I just take this liquidity off a second, we have been forming quite a typical Elliott wave kind of structure. Right now you could say, where's my Elliott wave? This would be, I'm just going to take my magnet tool off. This would be the top, come down for, the first wave. And you can tell there's 5 waves within that structure. And then we've got what looks to be an ABC correction. That would be A to there, B to here, C to there. That would be a zigzag based pattern. And then this would be a third wave down. So for me, I definitely think we are going to move down, and impulsively so. If this is a third wave, then, where could we end up that third wave? This could be wave 1 of that third wave. 1, 2, 3 down to here, 4, and then 5. So your actual third wave could come as low as here, clear out this liquidity, retrace back up. Normally your fourth wave can be a little bit kind of a bit longer. I mean, I don't trade Elliott waves for price action, it's more for the downward trajectory. I mean, right now I'm looking, that just looks very much like it's in that kind of zone and that pattern. So just looking and monitoring that right now. The other thing I'd like to do as well, so look, if we, it would be very easy to just jump on a short, and it depends on whether you're a day trader or whether you are more swing trading or even scalp trading. So if you're looking for scalps, then you want to catch a move to the downside, but you want to know when to take your profit. And you know, the best way that I like is to look where commitment comes in. So, you know, one of the things we do is you identify on a footprint chart, where is the volume, and think of it logically, right? So right now, you know, we're kind of just in this area, and you can see each one of these represents a candle. You can see we're moving up a little bit, but you can see where the volume on a candle is. Like this candle, let me just expand this a bit. This candle here, the majority of the volume is traded, you know, in the middle of the candle. You know, if we take this candle, the majority of that was traded near the top. Now, what you're looking for, specifically for FOMO and where people get overcommitted, is where, you know, you get a big move to the downside, big push, and then you see all the commitment coming in at the bottom of the candle, and you see imbalances coming in, which is usually a sign of traders getting trapped. They see this FOMO idea where they think, oh, price is going to either the moon or you know, deep down below, and when it hits that bottom, you see a lot of commitment coming in, and there'll usually be a bigger player who'll absorb that, and then price will reverse back the other way. Again, it's all to do with moving liquidity, getting in and out of trades, and then taking advantage of that. So the way I'm planning this is, right now I've got a short waiting to be triggered, but I'm only going to realize that short up to the point where I think we see the buys start to wane. Oh, sorry, the sellers start to wane, and we see that commitment coming in. At 3 o'clock, we've got some really big news, haven't we? We've got the jobs coming in, which everyone keeps their eyes on, and then we've also got the testimony from our friend Mr. Jerome Powell. And I don't know if anyone saw the previous testimony, which was amazing. The guy was just basically explaining to him that, you know, your two metrics you're looking at is jobless, so how many unemployment claims there are, and then what your inflation rate is, and those are the two levers that they look for in terms of being able to control inflation. And he just got absolutely battered, and it was yeah, I think that's, you know, caused a lot of this kind of breakdown. So not too much action right now. This is more around just getting into a position. As I say, just monitoring the charts, just making sure we've got ourselves covered. Right now, I think we should expect a retest before we do come down. This is the brink session, so the first half an hour is normally a little bit kind of higgledy-piggledy while we wait and see. But hey, let's just see what happens. Who's currently watching live, by the way? I should say, by the way, why I like to trade where liquidity is because you have to think slightly differently from how you think previously. A lot of early newer traders will trade levels, and that's fine, and levels are important because they give a guide, you know, to where price comes to and reverses from. But the problem with that is it's never as easy as that, is it? It's not like, okay, well, we've drawn this nice trend line here, you know, this is like a new trend line, and so this is where I'm going to put my short from, because oftentimes, well, it's called inducement. So the idea is that there'll be a few kind of hits around that area, and we'll get a bit of a reversal. But the problem with that is, you know, if you're a greedy trader, you'll probably put your stop losses relatively close, or you'll have 100x leverage, or you'll go really crazy with the greed. And there's nothing wrong with that. You know, we're all human beings at the end of the day. The problem is, everyone knows where these stops are because it's just liquidity at the end of the day. It's just another order, and so therefore, if price does come back, tends to not just hit the point that you think is the exact line. It comes back and goes a bit further on. So this is all designed really in a way to kind of get you to think that you're a good trader and you keep hitting these points. And you know, oftentimes, I mean, this was the last liquidity zone here, right? So think about it, right? When we had this liquidity here, this was the point which we knew there were going to be a lot of stop losses. Of course, this was just shy. This just missed the liquidity by dollars, if that, $1 or $2. So then you're waiting, aren't you? So if you've got your, let's say this area here, you've got your sell orders, your buy orders, right? Because you think, okay, well, and this is a sensible thing. I'm not, this isn't me trying to say anything other than that. This is a sensible place to put a buy order. And the reason it's a sensible place is because oftentimes what you'll see is this wick down, claim the liquidity. Remember, these are where stops are going to be. These are where FOMO traders are going to trade down and expect a big blowout. When there's enough liquidity gains, the price will reverse back. And we saw that. We seen that exact thing moved, didn't we? So you can see that price there went from that point back up to there, which is a 315 point move. So that's all you're looking for. You know, enough points like that is all you really need, and you don't really need to trade again for the day. You're just looking for these reversals. You got to remember though, this can be a breakout, and the reason it would be a breakout again is how we react. What's the reaction like when we come down to this zone and level? Do we keep on dropping down further? I'd probably say no, because we've got more liquidity down here, and price very rarely just does these kind of big, you know, this. It very rarely does that. More often than not, it's kind of just in and out, up and down, up and down, up and down, to the point where it'll just snag a zone. So what we're trying to do is to find these areas where we get these reversals, but not on the line of inducement, more the line of area of value, you know, where people's stops are tending to be. It's not actually a difficult concept when you think of it logically. You know, where the stop's going to be, where are people going to commit? If you're a breakout trader, that's where you're going to commit, aren't you? So you've got to keep your eyes on that. So again, just thinking about liquidity, you know, we're going to have, this is that last point to defend. I mean, even now you could argue we've lost, you know, we've lost that upward trend when we broke out of this channel. And so for me, it's how do the bulls react to this breakdown now? Well, we've just come into the obviously we're 15 minutes into the start. We've got another 15 minutes left, and so for me, I'm monitoring the 3 o'clock. We're going to have a lot of whipsaw effects going on, so you've got to be careful. We don't know how well the testimony piece, that is not going to probably be too instant. It's probably going to be in and out, different views on how the information is going to be captured. So we wait and see. Crypto kick, my good friend. I do hope you're well, sir. Just going to remove that. I don't want to remove that. Let's have a look at some daily levels. So this is an interesting level. This is a daily level way back from the 11th of February. And so I'd expect some sort of reaction around here. So, you know, it's not quite where the liquidity is. Liquidity is a bit lower down. Now, normally what I'd probably suggest is when you have a lot of liquidity levels, these levels where we have just broken a specific area, like you could say this would be a level. Let me just make that white. And then you could say, you know, this would also be an area now. This is a new area where there's going to be liquidity under here because it's the lowest pivot point. Each time we come across here, we're going to see some sort of reaction, but there's liquidity just down here and there's liquidity just above here. Where you'll probably see a big move is if we do break this level here, in my opinion anyway. If we break this level, we'll probably get a big move down, because then the next level of liquidity is of course here, and then the one below that is here. So this whole zone here is going to be an interesting zone to see how we react. You know, will we just jump straight down? I very much doubt it. I don't think we're going to come that far down. I do believe we are working our way down here, but if we know anything about trading, it's never as instant as that, is it? So we just, for me, we trade liquidity to liquidity levels. We have to take appreciation of daily levels. And what is a daily level? It's where we've had, you know, a full 24-hour period of trading, and it's the point at which we reversed. Yeah, so a trend reversed at that point on a daily level. So there's always going to be significance around that. So you always have to kind of just watch them. What about weekly levels? Interesting. So we have a weekly level at 21,780. And again, applying that same fundamental of what we've just applied to the daily level, we also do that at a weekly level. So we're a trend reverse at a weekly. And so you could make a case that if we drop for a bit of liquidity beneath here, we could come down, maybe just peek past our weekly level and then come back up again. And so it's going to be fun and games. I think we're 15 minutes away from the 3 o'clock. I'm probably going to be online until about, when I say 3 o'clock, this is 3 o'clock UK time. So what would I say, 15 minutes into the open. I'm probably going to do 45 minutes. I will be off 15 minutes after the Jolts jobs opening. So yeah, so you've tightened up your buy zone. Yeah, I think so. I think it's a good shout. I just think it's too easy for me. It's too much of a drop. That's a big drop. You know, between, where would we say? You know, from here down to here, and we've got, it's liquidity, right? We could argue that these would be areas of liquidity, but if we go on a longer time frame, maybe if we go on the 4 hour, as an example. You just move that out of the way. You know, that would be a liquidity line, and that would be a liquidity. So theoretically, you're going to have some liquidity here as well. But if we take it for what it is, it's the bottom of this chart here where we had significance, and this is also a significant order block area as well. So you could probably say, you know, that area here, maybe go a bit down. I like to just cover the wicks on these. It's going to be, you know, a zone where we should see some sort of reaction. If it breaks through that area, obviously that's going to be fun and games, but this is the next level I'm going to be looking at. So we'll see. We are starting to move down. The thing I was really interested in, by the way, and I broke this down. Let me just take these off the chart because I think that I don't want to get a little bit too messy. We're just going to remove these. I've already mapped my liquidity areas. Some fair value. That's the fair value. Where's my fair value gaps? So these are all the areas above where we have fair value gaps. Now, I think for me, you know, I would want to see us come up and claim this one. I don't know if we're going to, though. The problem is 3 o'clock comes in, we're going to get a lot of activity, and so whilst we think price is just going to continue to go down, I don't believe it will. I think it's going to come up and take some liquidity first. I think it would be an interesting area to get a short from here. I mean, I'm shorting. I'm normally a little bit. I normally operate a little bit too cautiously sometimes, and expect that, you know, liquidity is going to be best case scenario. I mean, if I look at my area of value here, I have 2 areas here, and I have this area here, which has already been tapped, by the way. I put this area because this was the liquidity below here. So we've already claimed that liquidity, got a nice move to the upside. What was the point on that? Actually, I think it was about 400 points. Let me just check that. It was, so this was a scaled order, so we didn't get fully filled. But it was still a nice 320 point move. And so, you know, the area of value on here now really is now, I think I've locked that actually. You know, I would move this down, okay? And this would be, you know, the next area where it'd be targeting, just because we have a nice weekly there. We also have a new liquidity zone here. And then we have the ones below here. Above, I think if I just map these out, I'm trying to remember how I've done these now, but I think if I just put my area of value back on, this one lines up quite nicely with a number of key things. So we have a key fib level. You can see if I take the low here to the high, we have a fib, the 382 that crosses there quite nicely. We have the 0.5 down here, which is at that 20,756, but that would have to come right down below this liquidity here, so I'm not sure that will come down just yet. I always find a lot of the kind of good stuff happens while I'm asleep and the Asian session comes on. So that was one key zone. The other key zone that I was focused on was the, where is it now? My volume zones. So again, if you look at these volume zones, these are taken from, let me take the retracements off. These are taken from the entire Bitcoin price where the peaks all are on the visible range volume profile. So, you know, you can see this is essentially where we've traded the majority of time in terms of where liquidity is. There's most liquidity, and again, liquidity means low price impact, not a lot of movement, but then that's where you soak up the liquidity, gain the momentum, make the order book really small, and then, you know, you get these big moves to the downside with a lot of commitment comes in. So again, just looking at, I always like to keep my eye on where the next level of stickiness would be, and that's down at that kind of 20,150. Inducement, again, these are all areas where I've just mapped where the common eye draws attention to, where we seem to have, you know, multiple touch points. And again, just looking at here, again, I normally look at, if I have 2 touch points, then they're data points, there's 3. You've got a trend at that point. You can see a small liquidity grab here where we just came down, wicked down from that lovely move. I mean, that would have been a lovely move to have got on. Again, it happened while I was asleep. Here's where we've now broke that, and now we're coming back up. We had a little retest. So we may not even come as high as that. We really might not. That might have been the retest. But like I say, we've got a few areas now where liquidity is being built to the upside. And so the way markets usually work is you almost anticipate that. And this is the problem where a lot of retailers will just jump to the downside with high leverage without thinking that, you know, markets like to get liquidity, because it clears the pathway a little bit. It makes the path easier to do that. So just reading style and motives. Yeah, no problem. Awesome. So just to reiterate, guys, I've got a short order if we want to come back up here. Right now, you've got to remember, right, it's very easy for FOMO to kick in at these kind of levels, because it's like you think the price is going to go down, but we're trading into an area of support, right? So I know we've just broken support, but we need to see commitment. And for me, it's like you're short. It's like you're short at the bottom of a channel, and or you're gonna, you know, you're buying into support. Buying into resistance. It's not a strong way to trade. And whilst you may get a move as a breakout, these things don't happen very often. So you always want to try to get your trades in areas of value, and they are, you know, you want to short when you're hitting support, and you want to long when you're hitting resistance. The other way around. You want to short when you're hitting resistance, and you want to long when you're hitting support. And ideally, catch it on a fake out, or you know, a fail swing failure pattern. So 8 minutes. We shall see. It would be nice to come back up and test this channel here. That would be my fill. And then I don't mind if we crash to the ground. I just don't want to FOMO, though. It's not a good way to trade. What's our pivot points saying? Let's just have a quick check at our pivot points. I have not really checked these. Pivot points are where calculations occur for a given time range, so weekly or monthly or daily. You don't really go below that to figure out where your potential range will be. So the way you do it is, if I go on a daily time frame as an example, and I want to map the daily time frame, I would say, well, what's the trading range for the next day? Well, the way you do that is you take the high, the low, and the close, and you divide that by 3 because it's 3 data points, and then that will give you what you call pivot points. And the pivot, the P, is the point at which that calculation occurs, so it will give you a figure, and that's the point at which you expect price to come to. But then you have your kind of your support level 1, your support level 2, support level 3, and right the way down to 6, and then your resistance levels. So these are very much psychological points on the chart where we tend to come and you'll see a reaction around these levels. I think right now I'm on the weekly, but you can do monthly and whatever not. So I'm just going to go back to the 1 hour, and let's see if we have any confluence around these specific areas. So let's say, we have nothing on the monthly. What about weekly? Don't really have anything there. Daily. Now you can see a daily level is very close to your S1. So this is another kind of idea of confluence. What else do we have? The value gaps are above, volume zones are above, area of value are down there again. This is just where we'd expect price to maybe come down to. So I would be paying close attention to this area. If we look left, again, daily level, a lot of build up of momentum here. Now sometimes what the idea is on these is you tend to find within a week, so we're looking at a weekly range on these pivot points. I'm just going to get rid of the daily level real quick. On the weekly pivot point, so that's 7 days, right? So from this point here to that point, that's 7 days worth of trading. You don't tend to see price go beyond 2 levels. So if this is the pivot for the week, we wouldn't anticipate within this week that the price would go as far down or beyond, let's just say S2, to the upside. It wouldn't go above R2. So you're kind of looking at where your potential ranges is within a week, and again, it's just calculated based upon just a very standard calculation. I can't remember what the support and resistance levels calculated on. You can just do a Google search to find that out. It's very straightforward. But the pivot point is the initial start of that calculation. And so I always like to just kind of map where they are again for confluence. So let's take them off. We are 3 minutes away, guys. Let's just see. So the immediate impact we'll see is the jolts. That will be instantaneous. So we'll see how the market reacts to that. I think that's probably why right now we haven't seen an awful lot of movement, simply because there's an anticipation of what's going on at 3 o'clock. However, I think that will have an impact. I think the actual Jerome Powell piece will be a little bit more staggered, because there's a conversation that's happening. So we shall see. I'm doing a lot of talking here. I'll probably just be quiet for a second just while I chill out. Yeah, I'm with you, Kick. It's easy. It's too easy to. When I first started trading, I used to have these ideas where you'd catch these 2, 3, 4,000 point moves. Like it's like it can happen in a day, and although it can, because Bitcoin can move like 10% in a day, it's few and far between, and so it takes enough mistakes and wrong ideas before you start to realize that actually, where's the next zone of liquidity? Where's the next point where consolidation will occur? Is it an order block? Is there some sort of a fair value gap if you're an ICT kind of trader, which I am actually. I really like the smart money concepts a lot. I think there's a lot of really good ideas around that, and what I try to do is understand. Not so much for me. It's not good enough for me to just look at order blocks and fair value gaps and whatever. I have to understand why. It's not the someone show me an order block and then I have to understand, for me, why is an order block important, and for what reason was that an order block. I think that's more important to me than just being able to follow someone's guidance and just put something on a chart. So for me, I have to, if you'd understand liquidity and the importance of liquidity and that, the markets is just like, I think of the markets the way I think of, like, you're a person running in quicksand, right? So when liquidity's high, when there's lots of liquidity, you're in quicksand because it's difficult to move the markets. There's loads of liquidity, right? And when liquidity's low, you're not running in quicksand, and so movement can move fast because it takes a lot less moves or a lot less buying power or selling power to soak up smaller liquidity points. And so oftentimes when you see these big moves that go up initially as to start some sort of a move, it's really to grab that liquidity, make the order book very thin, and then a move can happen in the opposite direction just as quick, because again the order book's so thin that it's just easy to move. So that's the end. That's really the idea about trapping traders, so to trapping liquidity, and that's why you see these kind of triangles where you come to this apex. I didn't mean that, but anyway, you come to that point of the apex where the liquidity is trapped, and which side of that's being more, where's the more volume being trapped, upside or downside? And normally that's a good indication of which way that the markets are going to move. So I think there's two types of trader. There's those who know liquidity and those who act on liquidity, and there's those who trade patterns, and I was very much a pattern trader for God knows how long, and I never had any luck. Sometimes I'd get a good move, but on the face of it, actually it was just luck. It wasn't really analysis. And I think when you start to understand markets, how price action moves, more importantly, then it's a big difference in how you trade. So okay, 3 o'clock. You guys can't see this I'm just off the screen. I'm just looking at how the jolts move to the downside. Let's put our liquidity lines on real quick. Let's see, where am I? Come on, Andrew. So we've got to move to the upside. So is the news positive? Let's see. Jolts job openings. So we were forecasting 10.58. Still hasn't come through yet for me. 10.58. Oh, it's coming lower. Actually, it's coming higher. So there's more job openings than anticipated, but still less than previous. Previously it was 11 million pretty much to the dot. There's less job openings this time around, but more than what they forecasted. So let's see how the markets are taking it. Now, I'm interested in getting my order around this 22,400. I want to see a push to the upside, or frankly, I'm not interested. I'd rather miss a move than, get a move wrong. So you can see this here. Look at this, right? This was the 5-minute candle. Can you see this imbalance here? Wow, look at the price. So what that tells us is the volume of the candle was down here. That means a lot of people are starting to short. What does the market try and do? Trap the traders. The imbalance is here. You can see now the price is shooting up again, shooting through all of these naked point of controls. It's acting as a bit of resistance here. But the volume is at the bottom of the candle. That tells you people are shorting. And then when enough liquidity is being trapped, and this is the ByBit chart, so it's only representing one exchange, so it's not a true indication, but there's enough. Now you can see on these green areas here, there's imbalances to the buy side. So again, trapping going on up at the top, trapping going on to the bottom. Let's see. We don't know what's going on with the Fed at the moment. So not the Fed, sorry, the testify, Mr. Powell. But we're seeing this. This is the action we wanted to see. What's the commitment? So we've got 300 Bitcoin delta to the sell side. So there's more sellers on this candle. But I'm presuming limit orders or passive orders have stopped here a bit. You see big liquidation event up here. This would be a sell side liquidation, so converting buys to sells. If price comes up to here, 22,140. but the volume's still down here. There's the point of control. Most traded volume around at 21,899. New candle. What are we on? 5-minute chart. Price wants to continue up. This for me means, I think, my humble opinion, I think this is trapping buyers now. I think we're going to push up. You can see daily open was up here. You can almost imagine that what we want to do is come up, claim the daily open, and then we'll maybe come back down. So sweep the liquidity up at the top before the move back down. This is what I think I thought would happen. I'm not saying it's going to happen finished yet, but I think the way I would think how markets want to move is to claim liquidity above before a move down. Now it might not even go up that far. I mean, I'm saying my liquidity level is up here. This is at 22,400. So I'm anticipating a move up as high as here first. That will be just below the weekly open actually. So the weekly open was at 22,420. My order's at 22,400. So even if that does go above, I haven't gone crazy with leverage, so it wouldn't be too bad if we do go beyond that. Where is the limit order? Let's have a look at trading light. So trading light, you can see we had that whipsaw effect. I can remove that liquidity now, it's not relevant. Where's that commitment there? That's 22,200. We did have a large amount of liquidity. Well, I'll say large, relatively speaking, about 500 or 600 Bitcoin at that 22,392, but it seems to have been removed. So we'll have to see. Is anyone taking any scalps at the moment? A lot of indecision in the market at the moment, guys. Not a lot, not the best time to do a live. I thought we might have got some action today, to be honest, but still all relevant. Macro wise, I do think we are going down. And I have to jump off, unfortunately, in a few minutes. The only real place I'd probably anticipate a long, because I'm not going to be on the charts, I would entertain an order around this zone here. As to how far down, I don't know yet. I would probably, for me, I would do a long, right? Because around this area, below this, where the liquidity would be, I would go like relatively low in terms of my leverage, just to give me plenty of move. And I'm not going to be able to monitor the reaction, but I would have somewhere around that 21,200 would be an area that I'd be really interested in going long. But I would have I'd give myself plenty of room to move, maybe go down as low as 21k in terms of the stop. You know, if we come below that, I would just say, okay, it's an acceptable loss, only low leverage. I wouldn't be too crazy, but just in terms of a more swing move, I'd entertain an idea just in case, you know, again, it's more of a trap to move price, because, you know, on the grand scheme of things, if we look, let me just clear off this chart so it doesn't look too messy. Which, in my opinion, is if we break this here, if we do break this 21,300 and something, actually, yeah, that would be then we go into bearish structure. Right now, we've still got higher lows and higher highs on a macro level, yeah. So, you know, these are all still lower highs, and then you've got your higher highs here. So it's still macro bullish on the daily, at least. But, you know, we don't know how this is gonna, which is why this is gonna be defended so harshly. By the way, there's no way the bulls would make this easy. And whilst we may get a small wick, you know, I could still anticipate that we'd see a reaction at this level. So it's ultimately why, for me, I'd probably have an order around at 21,200, relatively loose. I'm not going to be too gung-ho with high leverage, but let's see what that reaction is like. But in terms of a move down, I would, yeah, again, there's my target, 21,400. If we want to come up high and take that liquidity, it would still print a lower low, so it's still bearish in the more micro landscape, let's just say, and then ride that down to just before here. I would look to get out around that 21,500, something like that. I'd be happy to kind of ride that down, only because it's, or maybe even a bit higher actually, maybe 21,600 just before these liquidity areas here. What time are we on? A few more minutes. Guys, by the way, if anyone is not in the Discord server, the link should be in the description. The salesman in me would say, I'm now officially, by the way, an official partner of ByBit, which means I get to offer a lot better sign-up bonuses than your typical kind of just referral link. So again, if you are looking for a central exchange to use, I use ByBit myself. I'm on the ByBit chart. Feel free to use that link for I guess a better referral. And yeah, come and say hi. My good friend is also been in Crypto Kick. He's an amazing trader. I've actually learned an awful lot from him. He's a really good guy as well. He's built a lot of fantastic indicators. Really good one on liquidity, which I love, for understanding where liquidation levels are. Does look like we're starting to see a bit of a move now, though. Let's just see where we are now. So we can see here we've had this nice push to the upside. I wonder what's going on. I'm imagining now that our friend Mr. Powell, because he took a battering, by the way. If anyone watched it, he took an absolute battering in the last session. He's probably going to come out guns fighting and all ablaze. So we did, yeah. We've just took out all of that liquidity. So you can see, you know, if I put my liquidity lines on, we've taken this liquidity and all of these ones here. Hopefully we come and take this one. We may even come and take this one here, but I've got a good enough order that I wouldn't get stopped out here. I don't think we'll come up as high as here, because then that would basically reverse the market sentiment for this short-term move. And I do believe, well, things are not great, are they? So let's just say, so we need to just see. Again, this might be me just being fucking over precautious, and maybe I should have saw this is the area that I would have been interested in. However, it's always for me about confluence and more areas of where I think I'd want to get in. So you normally find, so this liquidity, let's just take this as an example, right? So this is why you don't just go on the line, because if you put your order in here, we've gone another, how many points is that? Let's see. From where the liquidity was, we've gone up another 87 points. Now, if you're a 100x guy, well, you've just been liquidated, because I think it's about 80 points for 100x. something like that. So again, liquidity normally goes and grabs a fair amount before it will reverse. So you always want to be mindful of that. I would like to see another push up here, another big commitment. The volume is not great in terms of, okay, it's higher, but it's not, you know, it's not like this volume. So there is a little bit of a battle going on. Let's see what's going on very quickly on here. Look at that. This is what I'm saying, right? So forget about needing to understand footprints and forget about all of the kind of stuff that we see, you know, with the important thing you need to look at is where's the volume, where's the traded volume, and often and always have this in your mind, right? When commitment comes into a candle, right, what it normally means is if there's enough commitment to look, and look, by the way, look at the trap. Okay, what are these here? These are the guys who are shorting. Look at the imbalance. 28 Bitcoin, and this is just on ByBit, so you know, can't commit to saying this is all exchanges, but 28 Bitcoin to 2.1, 34.6 Bitcoin to 2.7, 52 Bitcoin to 0.35. Of course, now all of that liquidity is being exchanged, so it's made the path of resistance really low because the liquidity is being soaked up and prices reverse back up. So even without you technically having to be a, you know, a sharpshooter when it comes to footprint charts, just look at the volume. Look where all the commitments come in. Bottom of the candle, of course, that's enough to reverse it. And right now, look at the top. Commitments coming into the top of this candle. Point of control was here. Liquidation, liquidation, liquidation. These are all liquidation events that have occurred. And now let's see. Now, that's not to say that we won't continue to the upside, but it's wrecked, you know, wrecked some buyers at the top or people who have been shorting. And now the price, let's just see, is starting to come back down again. So just be mindful. Okay, team. So I think that's enough from me on this one. God, look at the imbalances there. I will love you guys and leave you. Thanks anyone who came in and watched it. Really, really appreciated. Happy trading. Don't get caught out by the market maker or the